Cool. Welcome, everyone. Today, I'm excited to talk to you about the 4 systems that I use to grow my business from pretty much zero in 2016 to over $50 million a year in revenue. And it's the same 4 systems that I'm going to use to continue to grow. They apply to any business. So no matter where you're at in your journey, these can help you. So if you got a pen and paper, great. If not, we can take in your memory. So what we're going to cover are each one of these blocks. I've got this quadrant here. And the first one I want to talk about, and I think is the most important one, is what I call the owner system. So as a business owner, right, the business will never outgrow you as an owner and how you view, the world. And we think about it like this way. We all have the same number of hours in a week, right? Like me, you, Elon Musk, Jeff Bezos, like Bill Gates, like all these guys who build these massive companies. We all have the same exact amount of time, throughout the week and the days. So the question is like, well, how does some people get so much more things done and accomplished while others feel like they'll live on Groundhog's Day, right? And it's just like over and over and over again. And so it really comes down to this first block, right? Which is this owner systems. And the first thing that I think about, and I've experienced in kind of my own business and when I talk to business owners and we coach and help people, is this idea of what I'm gonna call the hero versus architect. All right. And the idea is that when you launch a business, when you get it off the ground, you have to be the hero, right? You got to be the one who saves the day, who does everything, who puts out all the fires, who just like everything comes at you and you have no choice but to go and just like do whatever it takes to be the hero. And it feels good, right? It feels really good at the end of the day to know that no matter what came at you, you were able to solve it. You were able to fix it. And like you are a superhero. And you grow your business through brute force, right? You grow it like you're like Superman picking up some car over some lady and like throwing it off. And it's like brute force and it works. Now, the problem though is over time, right? Like as time goes on, you continue to kind of feel like the same way and you're making progress, but you get this sense that like you want to grow, like you're tired of being the hero, right? You're tired of saving the day. But the challenge is you've built your entire business around this mentality and you've trained everyone around you that if they have a problem, you come to you and you will solve it because you're the hero. And ultimately the team that you've built kind of like relies on you and everything goes up to you. And the only way that you can break this mentality, and if you really want to take the business and like grow it up to here, right, is if you have to change to be the person with the mindset and not just like your actions, but also the mindset around being the architect. And I think of the architect as the person who builds systems, right? They are the ones who goes out and they find other heroes that want to save the day and they're able to put everybody together. Now, it sounds easy, right? It's like, it's easy for me to say that and it's easy for you to think, oh, like I could do that. But the challenge is you have to let things go. And this is where kind of this like owner mindset and system really comes into place, where if you truly want to move from being the hero who saves the day and does everything themselves to be the architect who assembles the team, who builds the systems that I'm going to talk about, is you have to let people fail. You have to be able to hand off something to somebody and let them do a job. And in my rule, it's 80%. I'm looking for people who can do it 80% as good as I would do it. And that you have to be that's okay. That's good enough. And that they can get better. They can get to 82 and 85 and maybe even 90 one day. You never know. Maybe they could be better than you. But it's this idea that like that you have to agree that progress is better than perfection. And everything that you do, whether that is like how we go to hire people, how we build sales, how we do everything. Because if not, if you are a perfectionist and you want everything to be to the exact T with like the same number of like whatever, like OCD level things, like I've heard some crazy stories, is you have to be okay with progress. You have to be okay with people failing. You have to be okay that like, I am going to coach this guy on how to sell this job and I'm going to listen to him and he may not do what I tell him, but then afterwards we're going to coach him and he's going to make the call back and he's going to try to sell it again. right? That is progress versus owners that get stuck at, I don't know, $1, $2, $3, $4, $5 million in revenue, something in that range. They are the ones who, as soon as that guy like fumbles the phone call, they're taking the phone away and they're like, I'll just do it myself, right? And like, that's great for getting that one sale. But if your goal is to be the architect, if your goal is to say, I want to be the one who builds the team and builds the systems, it has to grow beyond you. And that's what this is all about today. Is I'm going to show you kind of some of my systems, but this is like the thought process. All right. So think about yourself, and this is where I do it. Like, where am I the hero, right? I ask myself this all the time. Like, where am I the one who has to come in and save the day? And where can I like let go of that? Because a lot of it comes down to me as being the owner and in the owner system of like, I need to sometimes, and I understand it's my baby and stuff, and I'm the one that built it, but sometimes you really have to let other people do it. Otherwise, you're just never going to grow, right? So that's the first one. The second part of this is you do this thing that I call an energy matrix. Now, an energy matrix is this idea that, you know, we tend to want to gravitate toward things that fire us up, right? That give us energy, that pump us up, that like, man, this is so exciting. And you're willing to wake up, you know, at 5 o'clock in the morning or 4:30 in the morning. You're ready just to like fucking go because you were so fired up about it. And then there's things that you do throughout your day and you own a business and they just drain you, right? It's like every time your phone rings and it's like the accountant, or it's like a certain employee on your team, or there's something that comes up and it drains all the energy out of you. And that happens, right? And so the point of this exercise, and I think about this a lot, is like, we want to figure out where are we spending time that is draining us, and where are we spending time that fires us up. So what I like to do is do this time audit where I'll think about my day. I'll get one of these little note cards. These little like to-do list things. They're like, you know, like a Post-it card. And in the morning, I'm going to write down all the things I plan to do that day. All right. So like, I'm having a meal like today. I plan on to do this live. I had a call with a real estate broker because they're bringing me properties. I'm working to fill out my next mastermind here in Philly in a couple weeks. So like, here are all the things that I plan to do today, right? And then below it, I'm going to write down all the things that distracted me, calls that I had to take, things that derailed me, emails, like things I didn't expect to do, right? And kind of the point of it is like, back to this idea of being intentional. Like, we all have the same hours in the day, right? How does some people get more done than others? Is the ones who are very intentional about how they spend their time. And so if we don't have a good tracking of how we're spending the time, how the heck are we supposed to be more intentional in figuring it out? All right. So then from there, I'm going to try to identify what are the things that I spend a lot of time on. What are the things that I spend no time on? So this is no time. Man, this thing, sorry, my freezing here. All right. Hold on one second. Let's just like make this look prettier for you guys. All right, I'm just going to start this whole thing again. And so we want to categorize them. And we want to figure out, all right, the things I spend a lot of time on and I spend no time. And then the things that drain me and the things that fire us up. Perfect. There we go. Cool. My chicken scratch. All right. So the first thing we want to look for is what are the things that drain us and we spend a lot of time on. So that's this box up here. All right. So we want to try to delegate those. Those should be our number one priority, to delegate. So if you had to think through, like, what are all the things that absolutely drain you, it sucks, and it takes a lot of time. Like, you were spending all this time on something and you just hate it. Maybe for some entrepreneurs, it's like the back office, right? It's like accounting and reconciling stuff. And like, you're spending all this time on the weekends and it's no fun. And you're spending like 10 or 20 hours a week on it, right? That is the type of thing that you want to identify, and you really want to get that off your plate as soon as you can. So that would be the number one thing that you would go through your time. You'd figure out, what can I delegate? What can I get off my plate? What can I go, and maybe someone's on my team should be handling this and I'm like doing it, but I shouldn't. Or maybe what are things that you are could hire somebody for, right? That the role doesn't exist, but it should. For $1,200-$1,500 a month, you can get an excellent bookkeeper in Latin America or the Philippines or somewhere, right? But we want to be proactive to figure it out. The next thing I'm going to look for as I audit my time and my energy is down here. So this is going to be all the activities that I don't have to spend a lot of time on, so like low time, but this thing, my thing like won't zoom out, but they fire us up, right? So these are the things that we want to figure out. How do we spend more time on these things? So for me, it's like deal making, right? I own 36 Midas shops. 32 of them have been acquisitions with I've established relationships with sellers. And so some of these, and because I know that franchisees want to sell to other franchisees, and then I knew that, hey, if I could go out and like everyone would know me and everyone like me and I could help add value to other people, then when they were ready to sell, guess who they're going to call? It's me, right? So intentionally, I spent very little time, but very high impact working on creating those relationships. So for me, it was like, all right, here are all the I literally made a list. Here are all the shops that I want to buy. Here are the owners. And I would just stay in contact with them. Just text them, hey, how's this month going? What are you working on? You have any challenges? I'd send them like what's working for us. I'd want to help them out, right? Because I want them to like me. And I want to see them like most of these guys were like, I'm like friendly with. We'd also, try to get lunch. I try to get dinners or beers every once in a while, maybe once a quarter. And I'd keep planting the seeds to find out when they're ready to sell, guess who wants to buy it, right? And I mean, one deal, for us could be worth $500,000 a year, like profit, right? So you think about like the time that I could invest in having a lunch, 5 lunches with a guy over 2 years, that could potentially make me $500,000 per year by buying his business one day, right? That's the type of leverage that I'm looking for, right? The things that create absolute massive leverage, which are for me was acquiring these businesses that I knew that I could roll into my system and we could run our playbook and immediately turn this thing in from, maybe 500 to $1 million plus, right? But that those relationships I had to create didn't take me 50, 60, 100 hours of work, right? They took very specific strategic, meetings throughout the course of time. So the goal in this, right, is how do we take time from this bucket of stuff that we like hate to do and kick that off to somebody, and then we take all of that newfound time and we focus it on the things that we want to max out, the things that fire us up, the things that create us a lot of leverage. So for me today, it's, creating content, right? Like I do this because this gives me massive leverage, and people are literally emailing me properties who watch my content, like that I'm like seriously interested. Like they're good deals. We have people who want to work for me, and we're talking about relocating from across the country to be on our team. There's investment opportunities, right? So like for me, creating content right now is like my highest leverage thing that I could do, that then my team, then I can give these opportunities to my team and then we can run with them. And so, that's why I spend time doing this, right? It's for me, it creates a lot of leverage. So you got to figure out what it is for you that you want to max out. If you're in like a sales business, it could be that you're the one, like I have a buddy in a commercial power washing business. He's like one of the best, one of the top producers. He can go out and build relationships with commercial property managers that he can get them to sign $100,000, $200,000, $300,000 per year recurring contracts. And he is an absolute, he's a killer at it. So for him, the more time that he can spend going out and prospecting and building relationships with these commercial property managers, that one guy could equal $200,000 a year recurring, right? And he's if he could get one of those a month, right, he really can stack his business. And so for him, any time that he's not doing that is costing him that amount of money. So that's the second one. Then we want to look at things that the number 3 in terms of like the priority is what I consider things that fire you up. So like you enjoy doing them, but they do take a lot of time. And these are ones that we're going to want to kind of like slow roll out of it. So for me, for many years, I hired everyone in our business and all the managers, and then I trained them, right? So I'd hire them and then I'd spend, 40 hours the first week, almost every single day with them, shoulder showing exactly how we wanted it done, training, coaching, like like to a T to make it work. And it fired me up because it worked, right? Like I enjoyed coaching people. I enjoy like this type of stuff. And I enjoyed seeing the progress that like I could have on somebody. And then I also enjoyed the money we made because, they were doing it the right way. But at a certain point that only becomes so scalable, right? You can only work with so many people at once. And at a certain point, you just don't have enough time because it is so time consuming to do this. And so it's not something that I would say you should cut off right away because it's really important and you enjoy doing it and you're probably good at it if you enjoy doing it, but that you slowly take it off. So for me, it was instead of doing all the training, I would say, let me focus on the things that I thought were the 20% most important. So in our business, like for example, it's financing. Like we want to get consumers on payment plans to help make auto repairs more affordable. We have a bunch of statistics that say if people use payment plans, they're more loyal and they spend more money, all this stuff. So I'm like, all right, I'll let somebody else do all the basic training, how to build estimates, like all the 101 stuff. And then I want to come in and I want to deliver like just the juice, just the 20%. But if they get that down, that'll like potentially create 80% of their success, right? And so that's what I mean by the slow rolls. Like you're going to pick it apart and you're still going to hold on to the things that have the highest impact, but you also need to give it out because again, we want to get time to the things that create the most amount of leverage, right? And that's a big one. And then finally, these one down here in this last category is things that drain you. Hold on a second. All right, here we go. Let me just fix this real quick. There we go. It's going to be things that drain you. So things that you don't like to do, but they don't take that much time. Now, these are the ones that you're going to handle these last, and I'm going to call this the slow bleed. Because these are all the types of stuff that, it's like sometimes you just want to handle it yourself, right? It's like that one-off email, that one-time thing, or twice a year you have to do this type of thing where it sucks. It's kind of like death by a thousand cuts. But like it's a low amount of time. It's not something that's like going to totally derail your day. And so for those, I try to batch them. So if it's like instead of you handling it right away, if you could just like let it delay for like a week or so, and then at once, boom, you knock out, in an hour or two, all these small things. You're also going to try to see who on your team you can hand these things off to. So maybe it's some marketing thing that comes in. You have to like handle it, and that you could create a system around the marketing to then hand off to maybe your accountant. Maybe it's like not maybe an accountant, but like a bookkeeper, somebody who works for you internally. It does your books because maybe your marketing thing is just like, hey, I want you to look at all these numbers, look at the report. This is my process for figuring out like what's working, what's not working. We want to double down on what's working. We want to cut what's not, et cetera. And it's not like it takes like a genius to do it. Like you're just really looking at the reports and following kind of this process. But something you could totally hand off to somebody if you could give them some instructions. So that's the area that I would just slowly work to try to pick off. Once again, not a huge amount of time. Kind of sucks though. So it's something that you want to be able to get over at the end of the day. And by the way, guys, if you have any questions too, happy to handle them in the chat on these these topics and the things we're chatting about here. All right, cool. Actually, a couple ones here. A couple of the comments here. I just saw. I'll take it in. Do I see auto repair shops as being my end goal? Other businesses in industries that I'm looking at. Yeah, I mean, so I'm in a couple different things. Auto repair is our base. It's our biggest business. It's the cash cow, to be honest. And then, my philosophy is a couple different ways. One is the money we make, I want to invest into buying more shops, right? And so kind of my flow. Hold on, let me just try to get this. Hold on a second. Let me just see if I can do a little magic here. Make me a little smaller. There we go. Hopefully that looks all right. Yeah, so my flywheel, right? I'll just tell you what it looks like, right? So we got Midas, right? So Midas is our main business that produces, the most amount of money. We're gonna take that kind of money that we make, and the first place that I'm gonna look to invest it is to buy more shops. Okay? Like we are actively looking to buy more locations. We are looking to buy competitors and convert them. I'm looking to buy independents and convert them. I'm looking to buy, today I was literally on the phone with real estate brokers looking at Rite Aids to see if we could like buy a Rite Aid and like convert it into a Midas and sublet out the part that's bigger, because it's more space than we need. But that is the best investment that we could ever made. All right. So that's like the first one. From there, I have really like three-ish buckets, I would say. We're going to look into partnerships, right? So for me, for example, like I have this business called Waterloo Turf, that I'm an investor in the franchise, or I'm also a partner in Houston. We're a franchisee. I have an operating partner there, kind of deal. We funded the whole thing. But it's really his business too. Like he's a franchisee and we're partners on it. And that's like a good one if it feels like businesses that we can have impact on. I'm also an investor in this brand called Frios, which is like an ice cream franchise. Really good first-time business for people. Absolutely amazing product. Goal is to take over Kona Ice is like the biggest dessert brand. So that's one place we put our money. The second one is into, what I'm going to just say private, just like more private investments that are not operating businesses. And so we invest into stocks. I invest, or not stocks. That's over in this bucket. Stocks and real estate. Other things that are really, really interesting to me, like gas and oil. We've done some ones where it's like an insurance company. I'm invested into like a firearms business. A bunch of random stuff. But those are interesting and just kind of fun to look at. And then we buy real estate and invest kind of in stocks and everything else. And so that's kind of the main. That's kind of the main side of it. I am not going to get into another business that I am like the operating partner, because there's this idea that like, I'm going to tell you right here, it's like simplicity scales and complexity fails. And literally this happened to me like multiple times where I went off and I had other businesses that I was like the operator. Like I was the franchisee, I was like the day-to-day. And like, so now my attention, right, instead of like narrow just on one thing, which is, which to say it was like the shops, is now like split into, it was a business called 100 Radiator. That was a wholesale parts business that we'd sell like, like radiators and AC cooling parts and stuff to shops. So it was like automotive related, but like, it was a completely different business. And like I was the main point of contact on both of them, and I had teams and stuff, but it still split my attention. And the more that you split your attention, the less like you can't see problems at a deep level when you're so split. You can only focus on surface level, the top level things, and like you're never going to be able to really truly solve and pick up traction. And so anything that I do outside of like our core stuff is all through partnerships, where that person that I'm the partner, is a partner with me, eats, sleeps, and breathes the business. Like he is the one who is every day waking up to think of like, how do I grow this business? So my partner, Rick in Waterloo, like it's all he does. It's all he thinks about is turf. He's like he goes, I think he sleeps on turf and he's crushing it. Right. And so, that's really important. And I see so many business owners, they're doing really well in their business, and then they hit some sort of like road bump, and then all of a sudden they're like off trying to start another thing. And it's like, and then their first business is pretty much going to be, it's like a death sentence to the original business. And so that would be something that I would say is I would do it, but it would be through partnerships with other people. Cause if I get involved personally, it's not going to, it's just not going to end well. Just to be totally honest. Like it's not going to be good for me or anybody else in it. Cool. If one-on-one advice. Yeah. So I have a couple things. I have this program called 8-Figure Franchisee, which through that we offer basically a coaching training program with like all my systems and processes to help implement the systems that I've done to grow my business. A lot of what I'm talking about today, it's like implementation of this. We have weekly calls, actually today at 4:30, and we help people install these. I do have some one-on-one stuff, but it's going to be a lot. It's going to be a lot more. But yeah, you can shoot me a message on Instagram or whatever, and we can chat about it. All right. Cool. So let's move on to, so first system is like the owner system. So this is going to be the one where you got to be like, think about it as an owner, right? Because you as the owner are the biggest limiting factor in growing your business. It's nothing else. It's not, I'm going to talk about these couple things in a minute. These other factors, they are not the factor. It's you. It's as the owner. And You have to be able to have kind of the right mindset and approach to think about it. Otherwise, you're gonna stay at whatever size you're at forever. So, cool. Cash system. So now this is number 2. So first we need to get the right mindset. Then the next we have to think about money, right? And there's a couple things here. First is you really have to have an understanding of your big numbers. In most businesses, it's going to be these 4, variable, fixed. All right. So you're going to have 4 big cost categories of your business. And so you should know right now, like if I said, hey, last month, like what was your business's payroll percentage? What was your cost of goods percentage? What's your variable cost and what's your monthly like fixed cost? I can tell you right now, for our stores, we want payroll at about 27%. We want cost of goods about 23%. Our variable cost is about 12% because we pay minus 10% for royalties and stuff, and then we have about 2% or so in credit card fees. So like every single sale, whether we're doing, we do 50 million, 100 million, 5 million, 10 million, whatever, we have 12% we got to pay, right? Doesn't matter. And then fixed costs. Like I know my average store costs me $25,000 a month, something like that, to run. We're like outside of like fixed payroll costs. And so like I could look at a report every single week and tell you last week, if payroll was 30%, cost of goods was like 27, variable's always going to be the same. I could pretty much tell you like, did we make money or not? Because I'm like, all right, and with all this, our goal is 15% net. And I could tell you that if we lost 3 points here up in our payroll, if we lost 4 points here in our cost of good, that's 7 points. And, so I'm probably going to be about 8% that week just because I know my numbers so well that like week to week, I don't even need to wait for I don't even wait for the account, like our team to finish the books, any of that stuff, because the business literally comes down to these 4 numbers. And in fact, it's actually much simpler than that because what it really comes down to in my business is our sales and our pay percentage. Now this is going to vary depending on what your business is, but my point here is like from a system approach, you need to boil your business down to the simplest terms possible. To like the number like and I'll show you in mine here that everything else, like it doesn't matter what everything else is because if you can nail these 2 numbers, everything else looks fine. All right. So for example, cost of goods, like our cost of goods is really 23%. It's 24%. Maybe it goes to 25. Some are 22, whatever. But like, it's actually extremely steady. We don't have weeks. It would be pretty rare for me to have a 27 or a 30 or higher than that. It would also be really rare for me to have like less than 20%. Like it's pretty steady between 23 to 25. So like in my mind, I don't really think about it because I know it's going to be a steady number. I also know my variable cost, right? Which is like my cost I pay to Midas is also an extremely fixed number. It's literally 12%, 12.5%. Well, whatever. It depends on like, did we swipe more American Express cards that week or not? But it's not going to vary significantly. So in my mind, I'm like, all right, I don't have to think about this. I don't have to think about that. Then I've got my fixed costs and I've got my payroll. Okay. So this is how I think about it. Fixed costs don't change. Right? For me, it's $25,000 a month. It is what it is roughly per store. And so the goal is that you drive revenue high enough to dilute your fixed costs, right? So that your numbers can fall in line. So for example, I could just tell you, if we did $25,000 in like revenue per store, and if payroll was at, let's say 27%, I am probably going to be around, I would say 14% that week as like our net. Okay. Which includes like depreciation. That includes like interest and specs and stuff like that. All right. I know for a fact that if we do like $22,000 that and payroll is, let's say it's 30%, our net that week is probably going to be like maybe 5%. We're barely going to make money. Right. Just because when the sales drop, that means the fixed costs eat up a larger percentage of your profit. And then also because your sales are down, the salaries that you have to pay to your managers is going to eat up a higher percentage as well, right? And so these are the only two levers that I really care about are what are we doing in terms of for me, it's our average sales per store, and like what is our pay percentage? Similarly, like if we do $30,000 and payroll is at like 25%, I don't know why I put a percentage up here. All right, so this is sales and this is pay. If we do 30,000 at 25%, we are probably going to be we could be like 16 to 17%, right? Because I know that we're driving volume, diluting costs and fixing your pay. The only way that I've got to this point is because I've spent a lot of time in my P&Ls, in the numbers, just going over and I've created some other content around this. I have like a basic course. If you guys want to kind of see my whole process, you could buy it. I could drop it in a link below. It's relatively inexpensive, but basically going through the entire process to figure all this stuff out so that later you can know your numbers. I talk to owners all the time and I'll ask them, well, what's your pay percentage? What's your net? And they just don't know. They're like, oh, I don't know what it is. Right. And it's going to be really hard and a lot of this I come back to is being intentional. Like you want to be intentional with as much part of your business as you can do, whether that is how you spend your time, how you spend your money, and what changes you need to make. And so it's hard to be intentional though, and take action if you don't know what your numbers are, right? So that is the first part of it is knowing that. From there, I'm going to look to do, now it depends on what it is, but what's called a break-even analysis. So we're opening new stores, right? We opened one in February. I opened one in July. We've got, we're trying to get 3 or 4, maybe 5 more new stores this year. And so a big part of me, the scariest part of opening a new store is you start from zero, right? You start from zero, and it's this question of how long until you make money. That is the scariest part, for me at least, to say, how long am I going to lose money until I make money? And now this store is at least supports itself, right? It can cash flow itself. And then from there, there's like a limited upside, right? Like, I don't care as much about I got to make this store has to make $200,000 in the first year. All I care about is breaking even. I just don't want to lose money, right? It's like Warren Buffett's first rule, just don't lose money. And so one of the exercises that you really want to understand, and this is part of understanding your own P&L, which is exactly how much do you have to do in revenue to break even, right? And so for most of my stores, I just kind of know that at this point, it's about $75,000 a month that I have to do in revenue, assuming payroll is good, cost of goods or rent's not crazy, in order for the business to make money. And so once we know what that goal is, it helps increase confidence that we can go out there and achieve it. But if not, if I didn't know what my cost to break even was, or if I thought that, hey, for me to break even, I need to do, I don't know, $150,000 in revenue, and my average store right now does, I don't know, let's say 30,000. That would be a pretty stupid idea, at least, in my world, because my store's only doing, my average store is 130. Yeah, my best do 300. But if I brought a new store on and the break even is 120, 130, and that's just a much higher risk, right? And you're going to have a way more confidence versus, hey, all I need the store is to do 75. I can handle that. No big deal. We can go from there. Cool. Got a question here. Rural or suburban areas. Yeah, we're all over the place. I mean, we have stores in the center of Philadelphia that are in, very urban, low income. We're right by Philly, we're right in one part of Philly. It's like the drug capital of Philly. It's just near Kensington, if you know the area. And we do really well there, right? And then we have stores in Villanova, which is some of the highest income areas in Philadelphia and the main line, and we do really well there. We actually charge the same prices regardless of where we're at. We don't discount in the lower income areas. We don't raise prices in the higher ones. And it's easier to manage, right? For us, because it's pretty simple. And go from there. All Cool. Second part of this cash system is creating what I call the war chest, where the goal is you want to set up 3 bank accounts. All right. We want to set up one that is for operating. We want to set up one that is for tax. Actually, hold on. We need 4, actually. Hold on. I forgot the operating one. I'm going to call profit, and the last one is growth. All right. So in our business, we have way more than 4 bank accounts, but we have, in theory, they have labels, and we have 4 of them. And so how it works is for every dollar that comes in, it goes into the operating account. So all the money, all the deposits, everything comes into the operating account. That is where we make payroll. We pay all the bills out of. We kind of have a number that we want that bank account to be at, and we kind of keep it at that level. And then as soon as it goes over that, we're pulling money away. And when we pull the money away, we want to separate into 3 different accounts. Number 1 is taxes. So once you start making some money, you got to pay quarterly taxes. We also, we have to pay taxes for triple net buildings that we occupy. It might be $150,000 that we owe in property taxes that are due over the course of 2 months in the springtime. Also when your income taxes are due. And so we treat this as an escrow account. So every single week we are moving a certain amount of money. For us, I don't know what it is offhand. I think it's like $25,000 a week, but I'm sure it could be whatever, right? But each week we've kind of figured out, here's all the money that we're going to need to owe in income taxes, quarterly taxes, in property taxes, just all the money that's not our money really. And so what we do is every single week we just move that money over, and it sits there, and it earns a pathetic interest rate, right? See, because what that does is then when income taxes come due, when these big bills come due, you're not scrambling because you've prepared for it, you're ready to go, you've overestimated, you've done all that stuff. And so even, this last couple of weeks, I owed, $250,000. My brother owed about the same. So we owed about $500,000 to the IRS. And so we had that in the account. And so we just took the money, paid it, and there's no stress because we were prepared. All right. Versus the way that I used to do it was all the money would just sit in the operating account. Right. And it would get bigger. But then in our minds, we're all right, well, we got to save money for here. We got to save money for this. We got all these other things going on. And then it kind of puts a lot of stress and you then don't want to take distributions because you're fearful that I'm going to need that money. Right. And, I don't know how much money I'm going to need. And there's back to being intentional because you don't have these systems in place. And now you're all reactive versus proactive. And so the tax account, as painful as it is to write those checks, it's less painful when I've already written off the money that it's not mine. All right. And we actually oversaved on that. And so then we each took a distribution that kind of felt like a bonus at that point because we've already written it off. And then we're oh, okay, great. It's it's our money now. So so you want to set up a tax account. Then we have these 2 accounts. One of them we call profit. One of them we call growth. Now for a while it was only one account, which is why I added it. So I'm going to talk about the growth account next first. So back to my the question I got of where do we have the money? We want to put as much money back into our business as we can because it is the best possible investment that we can make. I've had stores where, even this last store, we put $200,000 to acquire and open the store in February. And, that store is probably going to make $150,000 this year in the first year. So what other investment could you make where you invest $200,000 and you get $150 back in the first 12 months, right? Not many. And that's on my lower return. Most of the deals we're getting at least 100% of our money back. And that one we didn't, if we used debt, it would have been fine, but we paid cash. But either way, we want to put the money back into the business. And so same thing. We are putting money into this growth account. And so we set a threshold. So I'm just going to make up some numbers, but let's say, we want this operating account to be $100,000, right? So we say, hey, $100,000 is our threshold. That's the number we're comfortable with. And what we're going to do is every week, whenever that number gets above it. So let's say we got 120K at Monday or Tuesday or whatever day we pick in the week. Then what we do is we take the $20,000. And in this case, we would feed that into the growth account. The next week, we do the same thing. Maybe that week we've got 110. We take 10K and we'd sweep that into the growth account. So each week we'd go and we'd be sweeping the amount of money over our threshold. Now that threshold is set at a comfortable level. We did it as a multiple of payroll, I think. I want to say we did like 5 weeks of payroll or something like that. There was some sort of metric that we used that we felt pretty comfortable with from a balance standpoint. All right. So the growth account becomes the same thing for you, but escrow for you to grow into the business, so that when you go out and you start chasing acquisitions, you start looking at new opportunities. Or for us, like we are currently buying one of our buildings that we occupy. That the landlord wants to sell it. It's 1.6 million, so we're going to need $300,000 for the down payment with our bank. And so guess what? Like we already have $300,000 in that growth account that we plan to put back into the business. And so we can just write that check from the growth account. And like, again, it's not like we're pulling from savings. It's not like we're pulling from like this tax account or scrambling, because we've proactively been saving all this money along the way to go ahead and do it. Now, at a certain point, you may say, hey, I want to continue to grow. I want to like grow beyond, or I'm okay. I want to slow down the growth a little bit, and I want to take some money and maybe push it outside of the business. And so that's what we use the profit account for. All right. So those are kind of the difference. So in that case, the profit account is money that we could take as distributions. All right. So we're taking it out of the business. So maybe you could say, hey, what I'm going to do is I have $20,000 of like additional capital that we don't need. Maybe you say, hey, I'm going to take 10K and I'll take that as into my profit account, and I'm going to take 10K and I'm going to put that into my future growth account. Totally up to you in terms of what that looks like, but hold on a second. I got a disk almost full on my laptop here. Hold on, or my computer. Should be good. Cool. All right. So this is our cash management system. This is how we run it. We've run this way for years. It is literally one of probably the most critical things that we've done that has helped us have money for deals. And it comes back to this idea of betting on yourself, and that your business is the best possible investment that you can make once you have it, once it feels like an operating system. Because in the beginning, when you first start off, the business is a job, right? Like you go out and you work all the hours, and like your success is related to your direct input. And if you're not working, the business is potentially going to suffer, right? And like it feels risky to then put any money back into the business, because it's not really a business, right? It's a job that you have. And the point or the goal of owning a business, right, is to remove that self and take this and turn it into what I call like a business, which is now, and that's kind of the thing that I'm going to talk about, here, which basically means now we have these systems. And a system is really just a repeatable process that, you've documented that your team can run without you, right? And it can just go, people like know what to do, and it works. And you need these systems in order to grow. It can't be reliant on you. Otherwise, it's back to being a job. And then, so this is where it becomes less, I'm going to say less risky for you to go ahead and say, hey, I'm going to take, that $100,000 and I'm going to put it back in my business. I'm going to grow it, because now that can help me go from 1 location to 2 to 4 to 6 to 8. And I can actually build a team, and I can remove myself out of the day-to-day. And I've got people that know what to do and are frankly, potentially like better than me at it. And then the final stage, which is, like where I'm at today, and I, where I think, most people aspire to be, is that it becomes an investment, and that your business itself becomes an investment vehicle, right? Where instead of putting money into a stock market and earning, 10% or whatever it is, we can say, hey, I'm going to go and put, $1 million into buying X number of more stores, even if we have to start all these from zero, because I'm extremely confident that, that $1 million, let's say I could get 4 stores out of that, could produce me, $500K a year. Like, let's just ballpark this, right? And so again, if you think of it as an investment vehicle, like why wouldn't, like if you said, hey, you could put $1 million into something that could earn you $500,000 a year, like, and it continues to make money every single year. And eventually you could take that thing and you could sell it for, you know, I don't know, $2 or $3 million or more, whatever, down the line. Like that is a no-brainer. That is the best investment you could ever make. And the challenge is that it takes this progression to get there, right? It doesn't happen overnight, but it takes you willing to do the work, to start the job, to be the hero and brute force it all, take all the risk, to then build the systems, to create a business, which now the thing, like you have people and leverage, to then be in the investment vehicle, right? And then that's how, you know, these companies and people build these massive things, is because there's no better investment than yourself. All right. Okay. Next, just like for those who just joined or have been here. So the 4 systems we're talking about, number 1 was owner. Number 2 is cash. Number 3 is people. All right. The people system. So this is the one where we talk about like needing leverage. This is where you get it all. This is where you get all your leverage to really grow the business, because you can only do so much. Hero, architect, build the teams, etc. And so there's a couple things that we do. The first is you really need to build and have very clear vision on an org chart. Now, an org chart in its basic way is ultimately like who reports to who and who is responsible for what. And I will show you. Hold on one second. I just want to make sure my computer doesn't run out of memory here real quick. I'm just going to delete something real quick. It should be fine. Okay. That's not going to help me. Sorry. Cool. All right. So the org chart, think about it this way. It's like, you think about a football team, and it's like all the people that you need, right? And it's like we've got the quarterback, we've got a running back, you know, we've got defensive guys, right? We've got, you know, tackles, we've got wide receivers, we got tight ends, right? And they really, each one of them kind of has plays that got to run. They have specific roles. They know who to report to. They're on these different teams and they all work together. And an org chart is going to work in a very similar way, but it's important over time, because otherwise, like if people don't have very clear, like of the system of it's who does what, who reports to who, that's what creates chaos. And so for a lot of businesses, it starts with like you as the owner, right? And then you've got, maybe you've got a single store, and it's super simple. They report to you, right? And then over time you say, hey, now I get a second store. Now I've got a third store, right? You can handle that. No big deal. By the time you get to 4, then it's kind of like, all right, now you're getting pulled in a bunch of different directions, because not only do you have, you know, direct reports in the stores, but you have like ownership responsibilities, right? You've got taxes, you've got insurance, you've got kind of like the whole growth plan. You're hiring all these people, you're training these people, you're doing all these different things, and it pulls you in lots of different ways. And so what you ultimately then look to do is build around that. So the goal is saying, all right, at this point, now what I'm going to do is go ahead and I am going to, my writing is terrible. That's a D. It stands for like a district manager. Somebody basically who is like, you're going to be the point of contact, right? For all the stores. So this person now is going to spend all their time in the stores working on them. They're the ones who are going to take care of all the hiring, the training, the operations, the like, you know, all the like day-to-day stuff in the store, so that you can continue to focus on growth and buy more stores and maybe training and learning some of the new best practices. And like, man, sorry, my iPad's like not responding here. Okay. There we go. Oh boy. Okay. And then at a certain point, you can then buy more stores, right? Oh man, dude, what the fuck? Sorry, my iPad's like glitching out here. Hold on a second. Bluetooth. Connected. All right. Well, I'm gonna have to switch to my computer screen here. All right, one second. Let me just fix this. So you got this org chart, right? And then over time, it becomes more of a challenge because now you need to figure out the next capacity levels. And this is really where people start to hit the roadblocks. Where, hold on, let me just fire up a Google Doc here. We'll just keep this rolling. And by the way, if you have any other questions too, drop them in the chat here while I'm okay. This is gonna work. All right, cool. Let's go over here, Google Chrome. And we'll get this rolling. All right, cool. All right. 300%. Let's make this like 18. Okay. Okay. All right. So from here, what your goal is to say you've got maybe you've got this one DM and they report to 5 stores. And at a certain point, then, but a good DM will have the capacity to handle more, where they'll be able to go maybe 6 or 7 stores, right? And so as you buy stores, your team can then look to, to expand. Are you guys seeing my screen? This thing's all, dude. Sorry about this. I'm having technical problems here. All right, guys, my computer's glitching here, so I think I'm going to call it for today. But if you enjoyed this, I'm going to be back next week. I got more stuff I want to talk about. I want to finish the people thing. I want to talk about the growth. I'll get all this stuff squared away. And, yeah, I'll see you next week, guys. Cheers.